Well, hello. It's February 25th, 2025, and presentation number 1169. I'm Steve Carver, speaking with you from my home office studio at Dunn, North Carolina, and we're certainly glad to have everyone with us in our wrapping up a series of our Academy course tonight. Our part number 7 of a 7-part series. I want to let you know I'm not a lawyer or a CPA. I'm just a fellow that's been in business for many years and still counting, and glad to share with you some lessons that I've learned and hopefully be able to give you good advice. Main piece of advice I want to give you is always get a second or a third opinion before you make a major decision affecting your business or security. And we are so fortunate in North Carolina to have small business centers at our community colleges, not for the college students, but for the entrepreneurs out in the communities that they serve. And we're sponsored tonight by the Martin Community College's Small Business Center, with Charles Banks, the director, and he does a wonderful job, and looking forward to helping you any way you can. And Charles is just a wonderful fellow that you really enjoy working with, and you can give him a call, set up an appointment, or have him come see you at 252-789-0202. Looking forward to hearing from you. And his administrative assistant is Deborah Hardison, really dedicated lady who also does all she can to help us get the job done at the Small Business Center. So thank you, Deborah, for hanging with us through this series and providing all the information and taking care of the emails and such as that. Please, when you get your survey in through email, take 60 seconds, please, and fill it out, and do it after webinar. This is the place where you're able to tell them what you think of my presentations and of me, and just tell it like it is, and I'd appreciate it. And also give them information about future webinars that you would like for us to have. But take the 60 seconds, fill that in, and send it on. Your study guides have been emailed to you. If you didn't get them, I will be sending them again tomorrow for you. General talking points, your quiz. You can fill in the blanks and send it back to me. That's part of your qualification for Academy certificate. Lots of good information extra on sales taxes and deductions, which I think that you will enjoy. I suggest that you set up a file on your computer, call it your business journals, and you save these study guides in there, because someday you'll want to pull them up and maybe copy some information out of them or use that information. Just in case you want to come down to Clinton tomorrow night, that's over in Sampson County, at 6 p.m. We're going to have an in-person meeting. We're calling it a roundtable. Be informal with all of us just sitting around the table talking about the challenges that we're facing and maybe sharing ideas. Looking forward to that. Since we got a good crowd around Williamston, I'll speak with Charles. Maybe it's something we could do down your way too if we had enough people that would be interested. And we certainly did have a good crowd from Martin County in the Williamston area. On Thursday night, we'll be starting a brand new series, 7-part series, and you want to keep on coming and keep on learning. You already know that each time I change them up a little bit so I can give you something new to think about. Join us in our Thursday night series at 6 o'clock. And also today we started a new series, be a Tuesdays at noon. We're calling it a Lunch and Learn. Had a good crowd today. Had 13 folks come in for the opening class, and next week we'll start regular classes, which if you'd like, I'll put you on the reminder list and ask you to join us if you'd like. So we've got a busy time ahead of us and a lot of business going on. But again, tomorrow night is live. It's downtown Clinton. We'll have some pickup refreshments. Here's the building that it's at. And if you're coming into Clinton, all roads in Clinton, downtown, come right in front of the courthouse, which is where these green X's are. So you just come around, go down by the front of the courthouse here as my cursor is moving. Keep going down the street, and the Sampson Partners building where we're meeting is down on the left-hand side, and there's plenty of parking there. So if you do decide to come to Clinton, we'd love to have you. And Sarita, are you all set? We're ready to go. Sarita's doing the catering for us and getting everything set up. How you feel about it, Sarita?
Yeah, I put in the orders today for the pizzas.
Okay. All right. Well, I'll look forward to seeing you maybe around 4 o'clock or something like that. I'll be in touch and we'll see what's going on. Okay.
Okay.
And we'll get her set up. So y'all have just been a really great group attending, and I certainly do appreciate it. I expect several more will join us later on tonight. Most all of you have qualified for the certificate of attendance and finishing up. And as you send in homework assignments or maybe a video or your mission, vision, and promise statement, send me enough to show that you're really active and serious, so you can qualify for admission into the academy and get another certificate there. And we just look forward to working for you and being supportive any way we can. Looking over our group, Carolina's not on with us yet. Hopefully she'll be in later tonight. She's there in Williamston and working on her new business. I know she's been real busy. She's been in contact with me, and I know she's busy, and we wish her the very best. And hopefully by this time next year, she'll have her own business that she's owning, and we can tell you more about it. Barbara Belton over in Rose Hill, she's going to be in Clinton tomorrow night, bringing some of her samples, and we're looking forward to seeing her. And there's our friend David. Thank you so much for your loyal attendance and hard work, David. Sarita, Valerie Smith from Wilmington says she's going to drive up, be in Clinton tomorrow night. It's about a 90-mile trip for her, and we certainly do look forward to seeing Valerie. She's a sweet lady. And here's our own Sarita, who's kind of hosting tomorrow night. Van Clinton, I hadn't had a chance to meet Van. She hadn't sent me any photographs, but she's working to put a nonprofit together to help ladies that are having issues that they need help with in the Durham area. So thank you for that sweet and kind thing that you're thinking about doing. Kenyatta is from Clinton, but she's taking a new job in Oklahoma this week. She was with us during the lunch hour, and so look forward to seeing Kenyatta when she comes back. Donald Herndon is making that traditional sacred furniture. I think he'll show up tomorrow night in Clinton, maybe brings a sample of his work. Bobette's in Rayford, and Jeannie Walters said she was definitely going to be with us in Clinton. She's starting some type of real estate project. All of you, thank you so much. It's a pleasure to have you in the family. I look forward to getting information from you all along. Let's stay in touch and support each other every way that we possibly can. So let's talk about some a little bit of review. Get your fingers all limbed up and ready to do a little typing. Let me ask you some review questions. When fishing in the ocean, I told you in week 2 or week 3 that when fishing in the ocean, there's 3 really important rules, and that is keep fresh bait in the water, keep fresh bait in the water, and keep fresh bait in the water. Remember that? And the reason we're doing that is because if we want to catch customers, we need to keep what? What do we need to keep doing? To keep sending out frequent, something starts with P, to everyone on your DB. Anyone know what those blanks need to be filled with? We need to send out frequent what to our customers? Anybody doing some typing? We need to send out frequent promotions. That's exactly right, Lynette. And we need to send it to everyone on our database. Our long list of email addresses and cell phone numbers. Let them know you're alive and hungry. Keep them active. Bookkeeping, we're going to fill in the blanks. The accountant's job is to focus on the annual reports and tax returns and filings. The bookkeeper's focus is on what kind of reports? D and M. What would that be? Remember, the bookkeeper was a long-term, the accountant is the long-term. The bookkeeper focuses on the daily and monthly reports. Bookkeepers will tell you what's happening now while it is happening. The accountant might not be able to tell you till a year later. Filling in the blanks. For better sustainability, diversify your profit centers and try to have at least how many profit centers in your business? What's the minimum number of profit centers I want you to have? Annette and David both saying 5, and that's exactly right. And when we're looking at our profit centers, we need to have some of 2 different types of profit centers. Some of the centers start with the letter W and the other with the letter N. What would that stand for? The kind of stuff that people W and N. That's right, want and need. Want and need. And we want to mix up our profit centers so we have things that they want and they need. Search engine optimization is all about helping to get the right content on our web pages so that when we got our stuff right, we will what? What are we doing for our customers by using SEO terms? H customers FY, what would that be? It's answering the question, how do you find customers? And the answer is, we help the customers find you. In other words, we want to bring them to us. That's the purpose for our Golden Goose marketing plan, is to bring them to us so we don't have to go chase them all. When you're bookkeeping, we're going to use a set of tools to get our work done. And that set of tools describes our different types of expenses and our different types of income. And we call that tool what? A C of an A in bookkeeping when you're setting up your bookkeeping accounts. What is the C of A when it's related to bookkeeping? Type it in, please. It's the chart of accounts. Chart of accounts. Okay? Finding the endurance to stay in the game through these 7 weeks of classes. That's been an underlining thread for us. Always remember, stay in the game long enough to learn the secrets of it so you can make more profit with less stress. Tonight our focus is on basically 4 different subjects: record keeping, depreciation, taxes, and some secrets I'll share with you about how to close sales. We'll talk about record keeping to begin with. Taxes, government, bookkeeping, all of it ends up with a big stack of paper or a big amount of computer files, and that's record keeping. And having your own business means you don't have to be set up to keep records for several reasons. Number one, so you can serve your customers best. You have your good record keeping system, you'll be able to look back and see what customers have bought, what they paid for it, what they might need next, what kind of parts they might need, and to give you a good basis for continuing business, because we want to have relationships with our customers and stay in touch with them, so we have to keep up with the records. Second reason we need the records is the government's going to ask us to pay taxes, and the taxes are going to be based on what those records are. So we have to keep them, and right now I want to tell you, you're probably going to need at least 2 4-drawer filing cabinets to get started, just for basic stuff. You can get used ones or new ones, and some file folders, and set your files up and go from there. You can set up file folders on the information I'm sending to you. But there's other ways to keep records now. Of course, you got your filing cabinets, you got your storage boxes, you got your storage buildings, all that's true. But with the internet now, you've got ways and computers to save information on your flash drives, the little thumb things you plug in. Off-site software can download your computer for you. The cloud offers lots of different storage devices. Whatever you're going to be doing, find a way to store your work. And a word of caution to you right now is always save your work at intervals while you're typing and doing items. Some folks say they save their work after every paragraph. I don't know that that's necessary, but the power surges, just mistakes you hit in the wrong key sometimes, will make you lose the work that you've been doing. And I've had some times when I have lost 2 or 3 hours worth of work when I should have been saving the file and I didn't do it, or somehow or another it got lost and disappeared. So Save your work as you go. That's the biggest thing you can do about help keeping your records and being less frustrated. Some items we have to keep forever, of course, permanent records. And in business, you've got some records that you don't need to keep. Sometimes if they're really important to you or maybe valuable, you might want to get a safety deposit box at the bank. You can rent those at banks. A little safety deposit box the size of a regular desk drawer usually costs in the $35 to $50 a year range. The larger boxes, a foot deep, 1 foot by 1 foot, usually will cost you in the $70 to $100 a year rental range. But if you've got some records that have piled up through the years, family and personal and legal and mortgage type stuff, having it in a safety deposit box is about as secure as you can get. And otherwise, if you don't keep those records at home, think safety. Think, let's put it somewhere where it won't get wet. Flooding is not going to be an issue where I'm storing this. Also, keep it away from where you think there's even a chance of a fire to do that. Because you don't need to find these from time to time, and you want to make sure they stay safe and secure. So things you're going to keep permanently are the articles of incorporation of your business, audit reports, annual audit reports, capital stock and bond registers, deeds and mortgages, titles to cars and vehicles, depreciation schedules, your year-end financial statements and tax returns. You need to keep those. You just will be surprised through the years, if you've been in business a long time, how often you'll need to go dig up records for that kind of stuff. But in the main, most of the coming and going paperwork, the government wants you to keep it for 7 years by law, and I want you to keep it for 8 years just for good measure. But the 7 years is about things like bank statements, cash records, employee records, shipping notices, and things like that. 7 years. But the reason I said 8 was because every year after I get my taxes all done, I box them all up, put the tape on them, go back to the storage closet and slide them in the right place. Every year after I do that, a few weeks or months later, things will start trickling in or showing up that I wish I had put in the box. Of course, I don't go to get the box down and untape it and all that. I just put whatever came in this year's box in a folder that I write last year's number on, like 2024. Put it in a folder and in the top of the box. That way, if I need it, if I have to go back and find something, I'll know where it's at. So I keep my records for 8 years, and I suggest that you consider doing that as well. Sales tax returns are important for you. Your customer invoices, your check stubs, and that. Now, remember that last week we talked about those invoices, putting them the right numbers on them, keeping a chronological order, and when you put them in your boxes and put them in storage, it's a good idea to put those invoices on top, because that's going to be the primary thing that you're going back to your old records to look for. If you got a lot of paperwork, if you just keep your invoices in a separate box, that's a good idea too. Cancel checks sometimes are nice to have handy as well, but the main thing you'll be going back to search for is customer invoices, because people pass away and their heirs want to find out what they bought, when they bought it, how much it was worth, and a lot of good information like that. So be careful and keep them for 7 years. Now, David, of course, up in the mountains, and all of us that live down on the coast have dealt with floods and hurricanes and tornadoes. And more than ever, I think in North Carolina, we're familiar with the word FEMA, the government agency that helps folks when they can. And if we're in an area where FEMA is coming into play, where there's been a disaster, excuse me, and FEMA is here to give you some low-cost money or maybe a little grant to help get started, they're going to need to ask you questions about how much money you've been making or how much money you lost in your business due to the storm. And when you pull your records out, you're going to need to tell them what your finances were, because they're not going to pay you for lost business. They will pay you for lost profit sometime. And here's the two-edged sword about as we get into tonight. As you're doing your taxes and you're doing the very best you can to avoid paying taxes, and maybe you're totally successful, that if you're not showing a profit, then they're not going to have anything to reimburse you for, because it's all going to be looking back at your records. So when you hear that FEMA's coming to town, they're going to want to see a lot of records. So if you know there's a situation where you're going to need to pull your records out before a storm comes, that's a good thing to do. So that you will be able to have what you need. So if you're avoiding paying taxes all that you can, you didn't show any profit, you're not going to be able to get anything reimbursed. But one exception to that, which we're going to talk about tonight, and that is depreciation factors may have factored into your tax returns and took away your need to have to pay taxes. And depreciation then becomes a real plus for you, whether you made money or not, because the depreciation factors, in their opinion, will be just the same as profits, which may qualify you for some assistance. So keep that in mind. If you didn't show a profit during a year but had a lot of depreciation that knocked down your tax exposure, that's a good thing, and depreciation can pay a dividend when that happens. So let's kind of look at depreciation a little bit. It is a big factor for you if you're in a business that requires you to buy stuff, cars, tools, real estate. If you're buying tangible items, you're creating assets for your business, and with assets, it gives you a chance to avoid paying some taxes through the use of depreciation. That's why it's in the program tonight. It can be really important to you. And through the years, there's been books and books and books and college courses all over the world for folks that are into accounting, serious accounting. Depreciation is a big factor because it can get really complicated, especially with folks that have large assets that they're financing and buying and selling. It becomes a very important, powerful tool. Lisa Borga, whose picture is on your screen, is a CPA who wrote a really nice summary about understanding depreciation. I found it on the internet and have copied it here, and told Lisa we appreciate it because it's well written and fairly easy to understand. If buying and selling assets is something that's going to be affecting you, you really need to spend the 30 minutes or so it would take you to read through this and get an understanding of it, so that when you talk to your accountant and your bookkeeper, you'll understand what they're saying to you. But I don't hit the high spots right now to give you a good feel for what's going on. You've heard the depreciation before all through the years, at least the word, which means something going down in value, and that's exactly what we're talking about. The definition of it is reduction of value of an asset with the passage of time due to particular wear and tear. Common sense. You buy a new car, you drive it off the lot, it's a used car and worth less money, 25 feet down the street. Everything can affect the value of a piece of property or an asset. So when you invest your money into an asset for your company, that money has been invested in the company, and it has increased the value of your company. That value is called book value. The book value is the accounting of assets that you've purchased, what they cost when they were new, and a tabulation sheet on how much they're depreciating as they get older. That's generally what the plan is. So we want to depreciate them as they get older because they're worth less on average, most stuff anyway, and that can become a tax avoidance tool for you. So let's do an example here, okay? Let's say, Lynette, that you got $10,000 $10,000 in your hand today, and that's part of your business money. So your business is worth $10,000, okay? But you need to go buy a saw for whatever reason. You're making stuff out of lumber and you need a new saw. And this industrial saw is going to cost you $5,000. And you're going to buy it because you need it. The first question is, folks, because Lynette is going to take half of her money and spend it on something, does that mean that her value of her company is going to be cut in half? She's going to take away $5,000 in cash. Does that mean the book value of the company is going to go down $5,000? And the answer is no. It doesn't mean that, because she's still got $5,000 in cash, and she's got a saw that's worth $5,000 today. So the value of the company stayed at $10,000 at least for today. But the rest of the story is, while it's worth $10,000 a day, depreciation is going to come into play. So the government tells you that you can depreciate an asset over a period of time, and a variable period of time depending on what's available in the government regulations. Sometimes you can stretch something out for 15 or 20 years. Sometimes you can stretch something out for 5 years, 7 years, and sometimes you can write it all off the first year. So there's some flexibility there, and it's always changing. And this is a subject that requires that you stay in touch with your bookkeeper or accountant when you're buying things to find out what the depreciation schedule is. The rate of depreciation is called a depreciation schedule. And we're going to use tonight a 5-year schedule, which is quite common in business. In other words, and it's easy to use because we got a $5,000 asset. Over a period of years, we're going to depreciate this saw for 5 years to bring it down to zero. Each year, the book value on that saw is going to decrease by $1,000. All the way down in the 6th year, on book value, it'll be zero. Okay? So it's going down. Well, as that's going down, it's hurting, it's decreasing our book value of our business. Like it or not, the value is going down, and this is a way to keep up with it, and we need to keep up with it. But the good news is, while it's going down, the government lets you use that depreciation figure, that $1,000 a year, and reduces your taxable income by $1,000 for that saw depreciation. Yeah, let's say that you were going to owe $20,000 in and you had a tax exposure of $20,000. Not that much tax you had to pay, but that's what your taxes were going to be based on. Because you had that $1,000 depreciation factor from the saw, it would reduce your tax exposure by $1,000 down to $19,000. So now just imagine that you were in a business that had lots and lots of assets, each one of those bringing down your tax cost a little bit each year. It can add up to some huge numbers, even to the point that you not only do not have to pay taxes, but you got some carry forward on losses to go forward so that in future years it will help you as well. So depreciation is a two-edged sword, mostly a good sword, because it indeed helps you lower your tax exposure. A bad sword because it lowers the book value of your business. But really, the book value of your business is so flexible, and we'll talk about that a little later. To me, that's not very important at all. So, write-offs. We've heard the term write-offs all of our life, and people use it real easily. And there's two kinds of write-offs in business. Two kinds. One kind of write-off is just a general business expense. It's the everyday stuff we use to run our business. It's the payroll we have to pay, the rent we have to pay, the gasoline we have to put in our vehicles, paper that goes through our printers, general expenses, professional expenses like for accountants or lawyers. That money, we have spent it, and we have nothing to show for it except the experience. But there's no tangible thing to show for it. Those kind of expenses are general business expenses write-offs. You just put them all in the same sentence because it's going to end up saying it's an automatic write-off or deduction. Write-off means an automatic deduction. The other type of expenses are when we're buying real stuff, tangible items. And after we spend the money for it, this item stays with us for at least a year or so. A vehicle, a tool, a computer, a printer, furniture and fixtures, those are capital expenses. And they're capital expenses because in the accounting world, we're saying that we're capitalizing that expense because it is an asset now. We're taking liquid money from our business, turning it into a hard, tangible asset. So those capital assets or capital expenses are deductible too, but we deduct those through the depreciation process. Yeah. Instead of the regular business expenses, all that is done in 1 year at one time. But these assets, we have the choice to deduct them over a longer period of time that we get to choose depending on what's available from the Congress. So we'll talk a lot about them in just a little bit. So now we're over to the tax board. And every time, all through the years, when I talk to an accountant, a CPA, or an experienced bookkeeper, I ask them the question when I have a chance, what is the first piece of advice that you would give to a brand new entrepreneur just starting their business? Rose is getting ready to start her business. What is the first piece of advice that you would give to Rose, Mr. and Mrs. Accountant? And you know what, my friends? It's always the same answer. Never fails to be the same answer. It's kind of like that the accountants were asked this question just before they graduated from college and told, always remember this. The advice is, always set aside monies that you've collected that are tax money. Set it aside. Don't mix it up in your mind or bookkeeping system with other money because the tax money is not yours. It belongs to the government. And when you're dealing with payroll taxes, that money is yours today, but when you write that salary check, it becomes the government's because that is the withholding money that needs to be given to the government. This gets a lot of people in a lot of trouble. So just right now, go ahead and commit to yourself that I'm going to be straight with these taxes. I'm going to collect them and set them aside. I'm going to know my due dates and get them sent in on time so that I don't have to pay penalties, I don't have to pay extra interest, and I stay in good graces with the government. As you're collecting tax money, sales taxes, or as you're paying employees, set aside those withholding numbers so that you'll stay out of trouble. This will also help you understand better how your cash flow is working, and that just because you got enough to pay the salary doesn't mean that you've got enough to pay the withholding issues. Sometimes that can be 10 and sometimes as high as 25% of money above payroll money that you have to have as an entrepreneur. Got to stay on top of that. It adds up to a lot of money. Those taxes have to be paid. So I call it pigeonholing. When I'm setting money aside or putting it in a certain place so it's safe, I like to say I'm pigeonholing when we do that. Let's get back to expenses. The business expenses, general write-offs, are like rent, travel expenses, payroll, all those things, those deductions, no questions about it. It's what it costs you to operate your business. It comes off the profit side. Capital expenses generally are items that will last a year. They're always items that are tangible. Well, not always tangible, but almost always tangible. Just very few exceptions that can be depreciated. And an example might be website work that you've done, but you got to really be careful as you're documenting that. Let's just leave everything intangible away from the capital expenses. We're talking about hard, tangible items that you can go put your hand on inventory it, you can show it to a tax auditor when they come by, such as that. And the capital expenses are going to save you money through depreciation. It can get real complicated though if it's really expensive items or items that you're borrowing money on it and making monthly payments. You'll need to consult with your accountant and or bookkeeper on doing things like amortization and depletion, because if you're borrowing money on something over a long period of time, you get to that extra money you're paying for interest and such as that for that item, it all comes into play and you can get some credits for it. Let's use some examples. Let's say talk about a $250 printer, like this one I've got sitting right beside me here, an HP 250, I think. This $250 printer will last me 10 years. As a matter of fact, it's already about 8 years old and doing real well. I'm going to capitalize that. I'm going to call it an asset and depreciate it. Why? Because I got a small company and I want to show some net worth. I want to show that my business is worth something, have some book value. So I'll leave it on the books and keep up with it for while I depreciate it. But if I was a big insurance company that had auditors all over the country, and every one of them had one of these little $250 printers, I wouldn't keep up with them individually. I'd write them off as soon as I bought them because it'd just be too much paperwork to keep up with, and doing it too often with that number of things to keep up with. A $2,500 printer or a $5,000 printer, got a serial number, purchase date, that's easy. Yes, depreciate it. Put it in your asset column. It can be a nice permanent asset for you. Now, when I bought the printers, I also bought cases of paper. Nope, you cannot depreciate those. That's just a general write-off paper. It's not going to be here forever. It's going to go. Throwaway item. Set of tires for your truck. Well, $2,000 set of tires used to last me a long time. I would probably depreciate them in my small company, but a large trucking company, they'd write them off. It's not even considered depreciating them. A brand new engine with a serial number, definitely I'd depreciate that. Probably trucking companies would as well. Forklift rentals. Paid $4,000 renting forklifts for used trucks. Every time I use the word rent, it's an automatic, not capital expense, but write-off business expense. Rental is never going to be a depreciated item. Payroll, nothing to show for it after it's gone, can't depreciate it. CPA fees, can't depreciate it. How about a $4,000 set of tools for your shop? Well, they're here. You can put those in a box, you can feel them, you know they're going to last a lot of years. Absolutely, yes. Let's depreciate them. They're going to be here, we can do that, get some little bit of tax help with doing it. Now, the fact of the matter is, very few people are going to buy a $4,000 set of tools at one time. Most folks will buy $30 this month, $300 the following month, and so forth and so on. And over the course of the year, you might come up with $4,000 value in what you spent. And that's good, provided you keep up with all those receipts, put them together, total them, and whatever the total is, depreciate that as a total and call it a set of tools. But you need to keep up with the receipts so you can show when you bought them and how much they total up. And then keep those tools together in a box so that you can account for them if someone does an inventory of your assets. And how about rent again? I'm renting a forklift $1,000 a month and been doing it for 24 months. $1,000. You sure I can't depreciate that? No. It's a general operating expense. How about delivery of the forklift? No, there's nothing to show for that delivery after the truck pulls away. But whether you knew it or not, I was in the forklift rental business for many, many years and had hundreds of rental forklifts that I did rent. So this is absolute fact. Let's say that you had rented the forklift for 24 months from me for $1,000 a month, which is even 20 years ago, that was a figure that was good, probably $2,000 a month now. So, but you rented it for 24 months, $1,000 a month. You paid $24,000 invested in that forklift, right? No. You didn't invest $24,000 in that forklift. I did because I owned it. but you invested $24,000 in the use of that forklift. You didn't ever claim to own it. You just wanted to use it, which is what rental's all about. That's why you couldn't write it off. But I'm going to offer you a deal. I'll sell you this forklift for $5,000 and you can own it. Don't have to pay any more rent. Just give me $5,000. You want to do that because that's a good deal. You're going to be able to buy a $24,000 forklift for $5,000. So it's a good deal. And that's called a rent-to-own plan. That's a good business to be into, the rent-to-own business. Now, the decision is you bought this really nice forklift that's probably worth $24,000, but you bought it for $5,000. How does it go onto your books, into your business? Does it go on there as a $24,000 forklift for your book value, or a $5,000 forklift for what you actually paid for it? It's the $5,000. Your book value just went up $5,000. Now, you've got on your books a $5,000 forklift that is worth $24,000 fair market value. And this is where I'll put the first nail down. There is a major difference in book value and fair market value, and this forklift proves it. The book value is $5,000, but the fair market value is probably $20,000. So when you're looking at values, always remember that just because it ends with the word value and talking about the same item at the same company, there's a world of difference in book value and fair market value. And we're talking about one forklift, and if you look at a large company with huge amounts of assets, that can be really, really important. Well, we're right in the middle of it now, which is tax season. Matter of fact, my bookkeeper sent me an email this afternoon, said she would hope to have our taxes ready on March 15th. That's fine. I've given her all her information on the corporate side and the personal side, and she's working on it. That's all you can ask for. But let's talk about that. What do new businesses need to know about getting ready to do your taxes, your state and your federal taxes especially? Main thing I want to encourage you to do is to hire an experienced bookkeeper. Someone that's been doing it a while, got some good basic common sense, and maybe more importantly, has got contacts. And if she gets into a question, that she has a CPA that she can work with and call up on your behalf, or other experienced bookkeepers to get feedback. Nobody knows it all. And when you're in a world of changing rules and regulations from the government and changing the software from the different companies you might be using to do your taxes and such as that, it can get screwed up in a hurry. So try to find someone with experience, life experiences and business experience. If you can find someone that has served companies like yours doing the same thing that your company's doing in the past, that'll give them a heads up as well, and they'll have an instant base of knowledge about what happens to going and coming in your type of business. Just food for thought. Try to get somebody experienced. Now, with a CPA, they generally have experience because before they can become a CPA. That's 6 to 8 years experience, I think, and a lot of college information. So CPAs come into the game pretty well prepared, but let me tell you, it's the same thing. If you can find a CPA that's familiar with your type of business, that's a good thing. They've got a general. Now, let me say to you that bookkeepers and CPAs pretend to be nothing but bean counters. They are all about the numbers. And they're generally good about the numbers. But here is what the issue that I want to drive home is. They are not salesmen. They don't know your particular business, your particular customers, the possibilities that are out there. They don't know all the pitfalls that maybe you're facing. So I've heard entrepreneurs say, well, I need to go talk to my accountant about this. And you know, sometimes I just have to hold my tongue, because what I want to say is, no, you don't. You want to go find someone that's been in your business before or knows your type of business to talk to about this. Because lots of times the bean counter will come up with an assumption or an opinion based totally on the numbers in front of them at the day's present. Where someone with experience will know that, hey, things are awful today. It's the slowest season we got, and there's a lot of potential around the road. Or if you do this, this, and this, you can rearrange things, and you'll probably be okay. I've had accountants to tell me before, when I went to them, Steve, you need to fold up and do it in a hurry because you're getting ready to go out of business. 50 years later, we're still kicking. 66 years later, we're still kicking. Because while they were telling you what they thought, and it may have been right, but you don't need to chart your course related to sales and staying in business or customer potential based on what an accountant or a bookkeeper tells you. You want to make your decisions based on experienced folks that have been in that business and understand the give and takes of it. Now, I'm not saying that when we're dealing with the tax issue, absolutely, you listen to your accountants, you listen to your bookkeepers. Dealing with payroll issues, same thing. But the general well-being of your company and its chance to go forward and be successful, I go find someone with actual business experience, not just bean counters, okay? So if I've got a bookkeeper in the class tonight, I'm not stepping on your toes. I'm really trying to take some heat off of you because I know that lots of times y'all are asked questions that you really are just like looking in a crystal ball. You don't have any basis for giving advice, whereas a trained business counselor might be a lot better for them to go talk to. The two words are avoidance and evasion. Tax avoidance is a good thing. All small business people, all business people, period, need to try to avoid paying taxes they don't have to. Tax evasion is a bad thing. Tax evasion is when you cheat and lie and misrepresent stuff, and that will get you in big trouble. So, and there's plenty of room in between. And when the lines start getting blurry, yeah, maybe on that issue, it's time to talk to a CPA or an experienced bookkeeper. But remember, avoiding taxes, as we're going to talk about later tonight, you better do it or the tax people can eat up everything that you ever hoped to make. And for you to make your decisions and how you buy and list things down based on the tax ramifications is an important thing to do. Just don't drift over into the tax evasion camp because that'll cost you money, time, might cost you your business. What are the hot buttons in this season? Hot buttons are always about deductions. What can I do to avoid paying tax? What are the tax avoiding issues that I can use? And this is the list that most often comes up when I'm talking with folks like you that are small business people that are interested in, can I use this as a deduction or whatever? So let's talk about them. Home office deductions are always at the top of the conversation list. And if you're dealing with a home office, here's the basis. Whatever the percentage of space that you're using to run your business inside your home, that percentage of the space will become a business deduction. You can call it a home office deduction. I'll use an example. Let's say you got a 1,000 square foot apartment. And inside that apartment, you've got a 10 by 10 area set up with your desk and a chair, your filing cabinets to run your business out of. 10 by 10 will end up being 100 square feet. And 100 square feet is 10% of the square footage of the apartment. Therefore, that 10% can be applied to your overall expenses to keep the apartment up. Rent, payments, interest, insurance, maintenance, lawn care, 10% of the total cost, plumbing, supplies of what it takes to keep that household going. So if the expenses were $10,000, then you could claim $1,000 of it as a home office deduction to lower your taxable income. Got it? But here we have to start keeping up with the space. And it's real easy to get kind of wacky and greedy here. And because you might say, well, I got a 1,000-foot apartment, but I'm using half of it. I can say I'm using half of it for my office and therefore take a 50% deduction for home office use. Well, yeah, you can do that, but you're going to have a hard time when you're squirming and trying to answer and justify that if you are audited. So be realistic, because this may not make that big a difference in how much less taxes you're paying if you're just getting started in a small business. The ideal way to handle this is to have an outside structure, a detached garage, a detached room, or a place that you can say, I'm renting this space for office use only. It's not where I'm doing my family living. This is an office space. And when you have that little building or building that's built as an office or garage, then you're able to rent. You as an individual rent to your company that space. And the company pays you a monthly rental check every month. The company check goes to you personally. Now that is taxable income to you personally, but it is revenue coming back into your pocket from the company. And it's a write-off for the company, so it kind of washes out. But what it does mainly is you get out of the sticking points of how many square feet are here or square feet are there, because the company pays the rent and it also pays all the expenses to keep that place up. And in those expenses, you've got some gray area to give you some leeway, maybe to stretch the margin, so to speak. I've been renting my office to my company for 30 plus years, and never had a problem with it. And I think that if you do it properly, you're good. They do require that you have a rental agreement. Just like you don't know each other, but you got an agreement that you sign them that says I'm going to pay you X amount of money a month, and do it. Travel, meals, and entertainment. Document it, log it in. There's software available now that you can put in your phone or your laptop to help you do that daily. You need, if you want to know for sure that you're going to be able to deduct it, you log it in. Justify it, and you're probably going to be just fine. It's in today's world, it is generally a lot better financially for you to own a vehicle, for you to own the car or the truck that you're going to use in your business. You own it as an individual. Generally, your insurance rates are less for one or two vehicles. You're able to keep up with the maintenance on it very easily as your own property. But the good news is, for every mile that you use your vehicle for company use, you get to ask the company to reimburse you. I think it's something like 63 cents or something like that per mile. The company reimburses you. So if it is 63 cents a mile, and that's set by the federal government every year, then if you drive your car 100 miles this week for business use, the company gets to pay you $63 to do that. Generally, with a full-size car, maybe a late model used car, it's not a gas hog, I've been able to keep a pretty nice vehicle up and make the payments on it with what the allowance has been to do that. So you pay the insurance, you pay for all the maintenance, you pay for everything related to the vehicle, and the company pays you back by the mile. The company doesn't pay those other expenses, they pay you by the mile to cover you, to reimburse you. If you've got a special business, like some kind of tree trimming business, or that you need a sophisticated special truck or tool, vehicle, then you're probably going to be better off to have the company own it and have it insured and such as that, because it's not a normal vehicle that folks would just use for normal transport or commuting. Those type of vehicles get to be very, very expensive. I mean, they just go through $200,000 before you blink your eye. So you might want to get special financing on them, special insurance so that you're covered. And that way, the company just pays for everything. But the rest of the story is, if you've got a company vehicle that you're using to commute and ride around on and do personal items with it with you and your family, if that's a company vehicle, the government's going to ask you to keep a log on how much personal use that you do with that company vehicle. And just here's the turnaround. Every mile that you use that vehicle, you need to reimburse the company for it at basically the same rates that we talked about earlier. So it's a flip-flop arrangement. So one or two vehicles, just regular, nothing special type stuff, generally you're better off to own it yourself. Got a fleet of vehicles or specialized items, usually it's better off for the company to own them because you get better insurance rates and there'll be a lot more expenses to deal with than a normal vehicle, and the company can just write those off all the way through. Rent is a write-off, interest is a write-off, taxes are write-offs, insurance is write-offs. We'll stop at insurance. As entrepreneurs just getting started, many times you've got young families, got a whole world and future ahead of you, and maybe security is a problem for you. Maybe you're going into debt, and you want to make sure that if you should die, that your family's not left with a burden. So buying life insurance on yourself and having the company pay for it is, number one, a good idea. Number two, you've got yourself covered to pay off debts if necessary, and look after special situations that may be in play if you should pass away. Two things to consider. The company can pay 100% of the insurance premium. And lots of times, the company can pay 100% of it, but only take 51% of the beneficiary rights. And that leaves 49% of the beneficiary rights that you can distribute as you want. But still, the company's paying 100% of the price. Also, as owner of your company, you're going to be owner of the insurance policy. And if your insurance policy is creating cash value as the years go by, at some point in time way down the road, that policy may be worth right much money. And there's nothing to keep you as owner of the company from passing that policy on to someone else. Okay? You need to talk to an experienced insurance person about how to make that happen. But I know that it's been a very important way to set up IRA accounts to pay for college educations and such as that, because the company was enjoying the benefit of having the protection the whole time it was paying those premiums. So just keep that in mind. That may be a way that you could look in to help getting a perk for owning your business. Business-related training is deductible. The travel that it takes you to go to and from class and those expenses and meals while you're in training, those are deductions, but you need to keep them in a log. Maybe you're in a pre-cutting business or a mechanic business or a cosmetology business, or maybe you're required to wear uniforms at your work, or you require other people to do that. No doubt about it, you can fully deduct all uniform expenses. But let's say that that's not the case. You just need to dress nice, dress to impress, and you wear out a lot of clothes in your business, traveling and such as that. Then I suggest to you that 2 or 3 times a year that you buy some clothes that you use at work, buy several of them at a time, so you can have a one ticket that's got a lot of items covered on it. Keep up with those, and then call that uniform expenses when you're writing down your deductions. I've done that for a lot of years. No telling how much money that we spent for uniforms, having full-size shops with 10 and 12 mechanics and 2 and 3 parts people and other salesmen that were in uniform. I spent a lot of money for uniforms through the years with uniform companies and also for buying specialized stuff. In today's world, a lot of people are using these orders where that you order in caps and jackets and coats and blazers and things with your names on those. You can do that and call it advertising, and that would be a write-off. Or you can call it uniforms if you're giving them to your employees or selling them to your employees. I generally would provide them X amount of shirts and jackets and uniform wear free of charge, but if they got extras, then they could pay some extra for that. That's a good thing that you can do to help your employees feel like they're part of the team. Tax preparers and collectors, let's just kind of focus on them a little bit. As you're getting ready to give your information to your tax preparer, you can gather up all the little receipts and tickets that you've had through the year, put them in a big brown paper bag, and just hand them to the preparer. I want to tell you, a lot of people do that. But it's costing you money when you do that. Because an accountant or a bookkeeper, they don't keep up with each thing that you hand to them. They'll write it down, they'll list it, they'll put it on a list, they'll analyze it. That's what you're paying them to do. But all that work means there's a clock ticking somewhere, and each tick, tick, tick is a dollar sign, clock, clock, clock. So any work that you can do to take all your little receipts and summarize them on a summary paper, I just did mine yesterday, it's close by here, list down the columns of the different stuff, get each year, add them up, and you do the summarizing of all the different insurance bills or different premiums there or other items that are deductible type items. You add them up and summarize them, just put them on one sheet of paper. Now, there'll be some items that you have to turn in with your summary, like your 1099s or your 1040 form, tax statements from the county or the city, refunds statements from the feds or the government. So they'll want to see those original tax forms. But the summary of your other expenses sometimes is just fine. Now, if they need to see additional information or proof of what you have given to them, then by golly, they'll ask for it and you take it to them. You need to be truthful with what you're putting down, because when you sign that document, when you sign that tax return, you're swearing that everything there is the truth. And when the bookkeeper and or the CPA signs it, they're doing the same thing. So keep that in mind. Be truthful, but do all the paperwork that you can yourself. You're summarizing, and that'll help keep your bill down and also speed up the process when it gets to the tax office. Who's going to end up with your tax money? Well, there's 4 different places they go, and we'll call it permits or license or estimates or fees, but let's just call it all taxes, okay? With the city, local governments, that goes to the town clerk. The county to the tax collector in the county seat. North Carolina is the NCDOR, North Carolina Department of Revenue. Federal government, the IRS. We are very lucky that with county and city government officials in North Carolina, they are generally very welcoming to entrepreneurs. Very helpful. You call up, make an appointment, have your list of questions ready, send them to them in advance if you can, and they will do a yeoman's job of helping you get going. And it's the same is true with the North Carolina DOR people. They've got a special division in DOR just to help entrepreneurs. And they also have regional tax offices that you can go to a regional office. And you can call them up on the telephone. The DOR will work with the different small business centers and put webinars on and seminars at the different small business centers. And they're giving webinars online on a regular basis. So our hats are off to the North Carolina Department of Revenue, and while we're speaking of it, also the North Carolina Secretary of State's office. They are wonderful to do business for entrepreneurs. We can't say quite the same thing for the federal government. Of course, that's nationwide and worldwide type stuff and get into everything in the world. I want to make one suggestion to you, and that is when you have issues that have to be dealt with the IRS or the federal folks, I suggest that you have your bookkeeper, an experienced bookkeeper now, and or an accountant, a CPA, to act as your intermediary, your representative, so that they speak on your behalf. But you know what? They don't even ever have to mention your name. The reason you'll do that is it's hard to get the same person back on the line with the feds, and because it's so complicated, it's hard to know even how to phrase a question, much less understand the answers that they give back, but accountants can do that for you. Fees would normally don't have to be paid. They normally are very reasonable, but you want to have the advantage of an accountant's ear and eyes looking over your shoulder when you're dealing with the IRS. Because as new business people, maybe not well educated in federal taxes, myself and or anyone else that's been in the business a long time will still give you this advice. Yeah, I've been here a long time and I know a lot, but I know that one thing I need to do is not face the IRS without an accountant beside me. Okay? Good luck to you on that. In your handouts or study guides are addresses and how to get in touch with the different taxing agencies. That's something you can find if you have to. I hope that you don't have to do that, but it's there for you. Now, vendors, like you and I may be, depending on what your business is going to be, setting up pop-ups and selling items at street fairs or county fairs or special events or just getting started. We got a lot of questions about taxes, mainly sales tax and use tax. So I asked my bookkeeper to, on my behalf, to get in touch with the North Carolina Department of Revenue and answer some specific questions. In your study guides is a summary of what I'm getting ready to show you, and there's references here that you can use. Now, when you get the recording of our session tonight, the video recording, you'll be able to stop. As you're watching it, you can stop the video anytime you want to, then refer back to your handout to do your homework and make different notes if you decide to do that. So the question is, when a vendor is at an event, are you required to collect and add up and pay the North Carolina sales and use taxes when you're making sales at a craft fair or some other type of fair? And the answer is yes. If you're in business and you're selling taxable stuff, you're supposed to collect the tax, and it's up to you to report it to the NCDOR. That's explained better to you on page 119 in your study guides. So, if yes, what tax rate should you use? Should you use the tax rate for the county that you're located in, for your home base, or the county where the actual event is? And the answer to that question is the county where the event is. So maybe taxes is 7% in your county, like it is in mine, but you're going to Charlotte or Guilford County or somewhere where the tax might be 8%. I don't know what it is, it changes, but when you get there, you need to talk with the manager of the event and ask them what the tax rate is. And that would be the tax rate that you will apply while you're at that particular event. Are North Carolina vendors required to collect North Carolina sales tax when the item is being shipped out of state? When something is being shipped out of state, it is not a North Carolina sale, and therefore you don't have to collect North Carolina sales tax for it. But you do have to prove and have proof of that it went out of state. Okay? Are North Carolina vendors required to collect sales tax for the other states where you ship that order? Oh. So you made a sale and shipped it to another state. Do you need to collect tax for that state? There's a lot of gray matter here and a lot of conversation, and some people would have different things to say of it. Unofficial, here's what we learned. And underscoring the word unofficial. If you're not doing over $100,000 worth of business in a particular state per year, probably not. You don't have to worry about collecting taxes for them. If you are doing over $100,000 worth of business in that particular state per year, or you have a sales representative that lives in that state, then the answer may be yes. Notice I put maybe because there's a lot of gray area there. And I'll tell you that when you approach that $100,000 mark in a particular state, you probably need to get some professional advice and nail it down. There's extra information related to that in your handout. Let's say that you're collecting money, and sometimes you go to small shows and you don't sell but $75 worth of stuff, and therefore all those nothing in sales tax. You have to keep up with that. Tax people say yes. Whenever you collect some sales tax money, you keep up with it, and then do a monthly or quarterly filing, list it down, and pay it. You'll be all right. But keep up with it and date it and where it came from and what the tax rate was where you collected it. More information in your study guide. Can you find a complete guidelines listing for these type of issues? Oh, yes. At the North Carolina DOR government.gov website, they've got a long list of frequently asked questions that covers all these issues and more. So I'll tell you, if you want to spend some time and learn more on your own, just go to those websites and go. Let's say you're a craftsman and you're making stuff and you're selling what you make. Do you need to charge sales tax on the items that you're selling? There's two-part answer here. If you paid sales tax on the ingredients or the raw materials as you bought them, and you bought this and you paid sales tax on it, you went to the hardware store, you bought some more, you paid sales tax on it, and you put this together, and now you have a finished product. If all the items in that finished product you pay sales tax on it, you do not have to add tax to it when you sell it. But if audited, you'll have to prove that you have paid tax on those items. A word of advice here: if you're going to be in the business and doing this all the time, then it will be better for you to get a resale tax exemption account. Easy to get. North Carolina sales tax people will help you with it. That way, when you go buy those raw materials, you don't pay the tax on it. And you'll have an account number to give to the people you bought it from. It's done all the time in all types of stores. You just say, I've got a resale exemption. Then as you put the product together and add up what you're going to sell it for and sell it to the retail buyer, you do add, in that case, you would add North Carolina sales tax, and everything will be just fine. But you don't need to keep up with those sales tax exemptions on the raw material that went into it. Some good information on this particular web page I've given to you. It's in your study guide. A lot of different kind of taxes, but once you get into it after your first few months, it will become second nature for you or your bookkeeper. We got withholding taxes related to payroll, a privilege license for little permits to do business in different towns, unemployment insurances, which will vary depending on type of the vocation that you've got going on, workman's comp type insurances that you'll be paying, and you'll get to pay a franchise tax. And this franchise doesn't have anything to do with owning a Chick-fil-A or a McDonald's type franchise. This is a little thing on your bottom of your tax form, state and federal, that say that, hey, you get to pay a franchise tax. Why? Because you're filing a return. It has nothing to do with you making any money or not. As a matter of fact, if you made zero income, you still get to pay a franchise tax. I like to say it's kind of what the government charges us just to file for the paperwork that they provided to us. So it's not a big item, but you'll see that little tax issue on your state and your federal returns. The state and federal returns were based on income and profitability. The more profits that you made, the more tax exposure you have, therefore the more taxes you'll pay. That's your state and federal. they really don't care about your assets. They don't care about how much stuff you own. It's how much stuff you make on those returns. But here's the other side, the county. The county will collect taxes based on your assets. The county will collect taxes with no reference to income. That's something. So they get you going one way or the other. So as we are listing these assets that we talked about earlier, you see how everything's going full circle? As we list those assets, we'll be adding them to our depreciation sheet that we talked about earlier, and that will be determining our book value. And our book value is the determining factor for county taxes. And they'll have a long form that list and cover all different types of assets that you may or may not have. However, most everything that you have to write down on the county tax returns is taken right off the paper of your depreciation list that your accountant does. How about that? That includes business vehicles, inventories, furniture, fixtures, things like that. But it does not include, thank the Lord, inventory that you have for sale. If you're a used car dealer and you got a lot of used cars out there that are for sale, you don't have to list those. The same way with a boat dealer or a farmer that's got grain in the bin or such as that. Items that you're holding for sale are not taxable in North Carolina. Now that's not true in a lot of states, and one of the big advantages for businesses in this state. But you'll have to list them and show them and tell about what you've got, but it won't be taxable. But let's say that you have got 4 used cars, and you've got 4 used cars, and 2 of them you have out there with for rent signs on them, and 2 of them say for sale signs on them. Well, those 2 that are for rent on January 1st, when you're filing your tax filing, they'll be taxable because you're not offering those for sale. You offer those for rent. So there's a tax avoidance issue in the way that you describe your products and what you got them for. I'm not saying that you can't have them for sale on January 1st, and then on February 1st, somebody wants to rent one, maybe you'll do that. The key is the date that you're writing down your inventory. That's why you hear a lot of people down on the coast talking about there's a lot of movement of yachts around the first of the year. People are moving them from one state to another or one port to another because of tax issues. So to avoid the taxes, they have moved those yachts and park them somewhere else during certain dates or certain times of year for those purposes. Same way with airplanes and campers and things like that. The auditor's radar screen, just a figure of speech here, that we don't want to be on the auditor's screen for sure. But the good news is only 1% or even less than 1% of tax returns are audited, but you might get the random ones sometimes. I've had 2 audits through the years, just random that my numbers came up. That can happen with any of us at any time. But otherwise, your numbers can come up because you have sent up some red flags that drew attention to you for certain things that you may or may not have done. I want to talk about that a little bit to try to help you avoid those flags. Shady tax preparers, people who traditionally cheat on the taxes for other people so they can benefit by getting more of a return and they get a piece of the action. There's a lot of ways that shady tax preparers can benefit from the information they put down on the tax return and the agreements that they have with you about if they get you a large return, they'll get a percentage of the money or a piece of the action. If someone is offering you a guaranteed amount of refund, and especially if it seems like it's not justified, then that smells to me. And David is with us tonight. He is an experienced 25 plus years tax preparer. And David shared with us last week. David, let me know if I'm getting this right. David shared with us that people who want to be square and want to have some credentials, they take training and get certification numbers from the U.S. Treasury, IRS, that says they're qualified, and when they file a statement, they're swearing that it's the truth. And if you can get that identification number and check it out from someone that wants to do your taxes, that's a good thing to do, and that's what you ought to do. David, if you're with us, did I state that properly?
Sounds good. We get what we call a PTIN number, which is our personal identification number, and we can be registered with the IRS and everything.
Okay, thank you so much. I got a professional with us tonight. Another thing you want to do to stay out of trouble is try not to listen to folks that are saying, I want you to do this under the table and that under the table. Under the table means taking advantage of unreported income. And the whole world does it. There's a whole black economy that does it in America and all over the world. But eventually, if you're getting out of bounds with that, and it's getting too free and loose with you, you're going to get caught probably. And the unimported income is a biggie, because they will put estimates on how long you've been taking advantage and not reporting your income based on what you bought or what type of work you're doing. And they'll lay a fine on you and a penalty. And indeed, these numbers can just get unreal. So don't get out of the way. Go ahead and report your income, especially now that you're a new business. You're not going to make a lot of money, therefore you're not going to have to pay a lot of taxes. But go ahead and show that income, show that your business is profitable. The more profits you're making, the better off it'll be when you're trying to get bids or loans or such as that, and grow in your company. So unreported income can be a bugaboo for you. Not filing on time is not a no-no. It's free. You can register, you can file late, but the key thing is to make sure you record it, and when you're filing late, that you're not having to pay a penalty, that you've got a date that you've told them that you'll make that return. People that file late every year and don't report it, something's not right there, unless they're a small business that I'll talk about in a little bit. So if you're always looking for an excuse to file late, that may be a problem for you down the road. Let me let you know that if you don't know this, let's say that you owe $5,000 in taxes on April 15th, and you don't have it. You just don't have that tax money to pay and send in when you return. And you can file late. You can say, I want to get an extension on this filing date till October. And they will grant that. So when October comes around, you're still going to owe that $5,000 tax plus interest from April 15th to the date that you do pay it. So, yeah, you can delay payment, but it's going to cost you some interest, okay? If you don't file for an extension and you just file late, you're going to owe the $5,000, you're going to owe the interest, and you're going to owe a penalty as well. The exception to this is if you're a small business and you ask for an extension so that you'll have time for your accountant to complete their work and hand to you a depreciation sheet so you can fill in those county taxes, okay? Now, to get an extension for your county taxes, you go to your county website, tax department. They've got a place there where you can click to request a business tax extension, and they will help you with that. If you get the extension, everything's cool. If you don't get the extension, but you just wait till after January to file your tax filing, and when the tax bill comes, there'll be a 10% penalty added to it. That's all across North Carolina, no exceptions. So as soon as you get your tax filing statement, go ahead and go to the county website and ask for an extension to April 15th, if indeed that you're waiting for a bookkeeper or an accountant to give you your depreciation list. If you're doing your own books or your depreciation list didn't change from this year to last year, you just take your last year's numbers and transfer them over and send it on in. You'll be just fine. So now we've been working at this for 6 or 7 weeks, and I really have enjoyed getting to know y'all and working with you. Let's do a little bit of review before we head towards the close here. What are the priorities? Remember that we are not going to just offer take it or leave it marketing. We're going to offer our customers options. And I do that every day, work towards how can I make my presentation, make the customer feel like I'm trying to serve them and make them a part of the deal. We have to work at it, but it's so important to do for repeat business. We want to create those raving fan customers, and then we want to follow up with them after every sale. Remember what we did to create the raving fan customer? The things that we said, I want you to be 100% satisfied. I'm going to do all I can to see that you are. And if you are, you'll do all you can to send more business our way. Raving fan customers have to be created by you. We are going to have a database with all the email addresses and cell phone numbers that we can accumulate, because with those two factors, we can send out blasts to our customers, promotions all the time without spending hardly any money at all. What is our most important intranet page? It's the mobile page for our phone. Our mobile page is what we have to spend attention for. What is one of the easiest ways to get started on the internet is with a My Business at Google account. It's almost free, and it's a powerful way to send customers to you. Our landing pages is where our SEO is going to get us to send customers. Our landing internet pages are designed to make sales, to create energy, and to get folks to do business with us right now. We do want testimonials. We want a lot of them, and we want to post them on the internet. We do want videos. They're the most powerful thing you can do to create traffic. And we want to remain and try to be the best person we can be individually, and then we'll be the best business person we can be to take advantage of that magic marketing moment. You remember what the magic marketing moment is? That's after you make a sale. You enter the customer's information into your database, and you go back to them to make sure they're 100% satisfied. And when you do that, you are creating your raving fan customer blossom, because then you're able to say, when was it you were going to buy something else? What else can you recommend to me? Who do you know that's going to buy something? When? What products do I need to add? You get the information from your raving fan customers about what's next in the game. Then you arrange your marketing schedule, your inventory, your future planning, so that you know you're going to have some business to do. Because here's the deal. If we're following that golden goose marketing campaign and budget step by step, then times may get bad. Economy may go soft. And folks who are not planning to survive and to thrive are not going to make it. But I want you to make it, because you do have that marketing plan, and you're staying in touch with your customers, and you're selling stuff that people want, and you're selling items that people need, and in bad times and good, those people will keep coming back to do business with you. So we've got to have the match up with targeted customer groups and targeted products that we're offering to them, and then the ability to stay in touch with them. And that's where the database comes into play. It's not rocket science. It's just having a rule book and staying with it. Now we're going to move into closing it out. Are there any questions maybe before I move into sales about anything I said that maybe you wanted to ask any questions about? If you do, now's a good time to speak up. It's like Rose is giving us a lot of information over here. I'll check that out. Okay. You're smart folks. You're here, you studied hard, you got good common sense. And you're in business, so you're getting ready to take some risk. So I'm not going to play around with Sales 101 for a freshman group. I'm not going to waste your time with 202 for a sophomore group or 303 for folks with a little bit of experience. I'm going to move right in and share items with you that are learned by professionals. And we call it Sales 404. In other words, you're at the top of the class. And at the top of the class, it still stays with the basics. The teams that won the Super Bowl a few weeks ago, you know what they did at practice? The basics. They just honed their skills and got real good at it. And that's what we need to do too with our business skills. When we get into selling, there's some things that come into play that are different than just regular planning. Oh yeah, being the best prepared negotiator always comes into play. But specifically, when it's time to face or on the phone, close the deal, we got to think about some basics. The number one basic is ABC. Just that simple. And that is our mindset and our focus needs to be on closing the deal. Not talking about it, not whistling Dixie around it, not feeling good and patting everybody on the back, but determined and focused on closing this deal. Predator attitude is my deal to have, I want it. But I also want it to be a win-win situation so at the end of the deal, the customer feels like they got the best deal and they're real happy. And all that takes a lot of finesse to make it happen. The key ingredient here is that they deserve your trust. And you deserve their trust. You have worked through and made sure that in the conversations and information you shared, that trust building has always been a part of what you're doing. Relationship building is trust building. So that's always a part. Now, we can do a lot of stuff right and one item wrong and just kill everything. And we got some things that people are doing every day that are wrong, and it's keeping them from getting deals. And they never know what happened to them sometime. I want to tell you, there may be 100 times more of these, but these are the ones that I see all the time. Is it okay for you to take a message or a cell phone call when you are in the middle of talking with a customer that you're building a relationship with? It happens every day, doesn't it? And even if the customer's got his cell phone in his hand, like so many folks do today, it's just kind of like it's glued in their palm and at their nose. Even if the customer's taking calls and talking on while you're trying to talk to them about doing a business deal, that is wrong. And of course, you're not going to tell them that. You're not going to step on the toe of your customers. But you know now that you don't need to have the cell phone stuck in your face while you're trying to talk business with somebody else. You don't need to be holding it like you're just hoping and praying that somebody will call you on the phone so you can take your attention away from the customer. That's wrong. And no matter how many people are doing it, and millions of people that are becoming more adapted to holding the cell phone in their hand all the time, whether they're at the restaurant table, or I even saw people in church last Sunday that were listening to the preacher and had their cell phone volume turned off and were looking at their cell phone during the sermon. And it's everywhere you go, that's the case. At my family reunion and probably at yours as well. But my friends, if you're going to be the professional salesperson you want to be, you don't learn to leave your phone in your car, because you don't have to take every call the very second it comes in. And every time you do that in the presence of a customer you're trying to create a relationship with, the message is the phone is worth more than talking to me. Well, that's what you're doing. If you're saying to that customer, I'd rather talk on the phone than to close a deal with you or hear what you're saying or be interrupted, then it's a mistake. Please don't do that. I know the whole world is heading in that direction, but you are special. And when you show the customer that you are here to serve them and to listen to them, do it. So in the continuation of that, how do you smell? What's your odor? You got lots of pets at home or in the car? Are you a chain smoker? Do a lot of smoking? And especially when you're traveling? You chew tobacco? Do you wear real strong perfume or cologne? Well, a lot of this world today is allergic to a lot of items, and strong odors and certain odors are part of them, and smoking is probably at the top of the list of the most offensive odor that you can bring into someone's office. So I will caution you, don't do it. And if I'm stepping on your toe, I sincerely apologize, but if you're a regular chain smoker, you probably stink. Just not missing any words. To the person that you're trying to sell something to, and they will be nice to you. People are generally nice, but they are not going to invite you back, and they're not going to buy from you. You just need to know that. And it can hurt you big time, because it may be that very special customer that can open doors for you for a long time. So put aside your personal habits to make your business work. Odor is a big thing for a lot of people. People are just really start coughing, gag, get sick, and just need to clear the room. Now, I was a chain smoker from the time I was 20 years old till I was 40 years old. And somehow or another, I just cold turkey and quit. And after I quit, then I started recognizing the fact of how things smell and how things are, and how addicted some of us are to smoking and other habits. That's not going to help your business at all. Certainly not going to help your health. So as your friend, I want to encourage you to deal with that. Get help if you need it. It'll help you with your business. This is the world and the year of politics. If America has ever been consumed by he said and she said and this side and that side and 50-50 enemies, I've never seen it before. And I am an active politician. Not that I'm running for office, but I believe in my politics. And I'm a one-way guy, kind of. But I try to leave that 100% out of my business conversations with my customers. Because I know that maybe they agree with me, but I also know there's a 50% chance they do not. And smart business people are not going to play their hand. No. You're going to stay neutral, and you're going to be smart, and you're going to be interested in creating a relationship with this fellow, not based on who their political thinking is, or which school football team they got to have. It gets down to that as well. Be smart there. Be smart. Be an American. Be a patriot. Be all for it. But try to leave your cutting-edge candidate political views out of your business presentations. By doing so, you have just improved your odds by 50%. Oh, yeah, we might say that in North Carolina we're all this way or we're all that way because everybody you know is. North Carolina was a 4 percentage points. That means it was almost 50% on both sides, and some states even closer than that. So keep your politics out of your business. Be a good thing to do. Someone's on the phone and the door is open, and do you walk into an office when someone is on a telephone call, even if they're waving you in? Or you walk up close to someone that's on a cell phone call so you can hear what they're saying? No. Be professional and courteous enough to keep the distance so you're not interjecting your ears into their conversations. You got no business in that, and you're nosy to do it. And even if they're encouraging you to come over, you do not. You're showing professionalism, and in the long term, they will appreciate it. Because you just don't know when someone's going to say something on the other end of the phone that will embarrass or cause concern to your potential customer, and you don't need to be a part of that. They don't need to be squirmy because you heard this or they said that. No reason to do that. Give them space. Now, all these things are fairly little things that just happen just naturally, and they can really cost you a lot of business. When we turn a customer off just a little bit, that may be just the amount that it took for us to lose the deal. And when we follow these basic rules, you will turn them on. You will improve the situation. And I hope this helps. You got a quote out here. It's been a regular customer, and you feel like you got this deal in the bag. I'm all right here. I'm going to count my chickens before they hatch, we used to say. Can't do that anymore. With cell phones and internet and text messages, people can have their minds changed in a flash. If you've got an important quotation or any quotation out there that you've given to someone and they haven't acted on it, you do not go to sleep on it. You stay on it. You stay in touch with them, not to bug them, not to make them mad or for you to act like you're scared, but you need to stay in touch with that customer to the good point of saying to you, your business is important to me, and I don't want to take a chance on losing this order. You're not going to lose a customer by saying that to them. Justify your aggressiveness. Justify your assertiveness and motivate them to give you the cotton picking order. You need it, you're hungry. I tell people my grandchildren need some shoes, man. Let's do this deal. Put some drama in it if that's what it takes. They'll love it. It'll make you different than the other people out here, plain Jane salespeople. Put drama into your presentation. Make them remember you and make them give you that order. In today's world, urgency is real. We need to stay in touch with people that are in touch with us and not procrastinate getting back in touch with them. They will not wait for you. They will find someone else. We had a customer today that had sent us a text message about quoting several pieces of equipment. And they gave us an email address that didn't work. So we had to get in touch with them using all types of Google searches to find out the right telephone number and get in touch with them. And they said they didn't want any telephone calls, didn't want a lot of conversation, just wanted a quotation. Well, we had to do all that stuff just to be able to give them the quote. So people are peculiar, but they want you to get back in touch with them, no doubt. In the jungle, the gorilla is the king. He bends the rules the way he wants to, and we call that guerrilla marketing. That's why Sales 404, the focus on closing sales, has got the cameo picture of our friend the gorilla. Here are some do's and don'ts. Never give away tidbits of valuable information. Be smart enough, be savvy enough to know when to hush, to know there's some things you don't say. I was dealing with a banker earlier this week, well, last week actually, a young banker, and he was sharp. He's right out of college, and he knew his business, and he gave me the information I needed times 20. He was so trying to impress me with how much he knew, he turned me off. And I didn't go back to him to say anything because I didn't want to come across as a sourpuss, but I will get the message to him because he's learning. Someone needs to tell him. Just tell what you need to do to present a good case. And the best way to do that is to be prepared. If you have prepared and practiced, you'll know when to quit talking when you have all the bases covered. Never itemize your quotations to tell more than you need to tell. When you're offering bids, be particular with what you share with the customer. Because in today's world of the internet, people can get in touch with other people instantly and maybe take this business that you were going to get and they'll give it to someone else. So you keep your trade secrets right to yourself. Every time you get a chance to make a sale, listen to me, every time you get a chance to make a sale, put a smile on your face and pitch it. It is a presentation. It is a proposal. It's just not a sheet of paper with numbers on them. No, it's something you're excited about, telling the customer about and showing them how much preparation you've done. And the bottom line is, you're not selling them one item here and one item here. You're selling them a happy ending with a very good comfort level. That's your goal, and when you can set it up that way, you will end up getting the deal when other people can't figure out how you got the deal. Keep the vendors, the subcontractors, and the manufacturers' names to yourself. Call them something else if you want to, but don't give away your trade secrets. Again, the internet has opened the door to people going right straight and taking your business from you. And maybe the most important thing to talk about tonight is I want to tell you that many, many people doing big ticket deals have a hard time, a difficult time just saying yes. Human nature forces us to save our money and be proud of the fact we've saved it, or to put ourselves in a position to spend some money as you get older, especially on bigger ticket sales. And when it comes right down to the bottom line, some of us will say to ourselves, golly, I don't want to do this. I'm kind of feel better with having that money in the bank. Even though I want this item, I'm just having a hard time turning loose of this security I've got. And I know when I say yes, everything's going to change. Where we're going to go. And they will literally not do the deals for months or even years because they just can't say, yes, I'm ready to do it. And that's a psychological thing inside of us. Anxieties, you've heard of anxiety attacks. It's real, especially when your customers are getting ready to spend real money. Can't say yes. Some people fight it so bad they're like this little girl. I mean, actually will cry and make faces or in excuses and reasons why they can't say yes. So now you know this, because most people do not, and they press that customer for a yes answer. Will you take it? You ready? Let's do this deal right now, okay? And they're not going to get a positive response, especially if they started that and continue. There's no way to go because we're getting to a take it or leave it situation when you do that. Here's the way I want you to think about closing deals. One is you've done your preparation, as we talked about last week. 100% preparation, you're ready to go into the deal, and you've got your paperwork, your presentations ready. It's a work of art. It's a work of art when the deal is in front of you and requires almost no effort to make it move forward. One blank line, place to write the number in, a place to put your initial. Very little paperwork, additional paperwork is needed to move this deal forward. And I want you to remember there's a fellow named Dr. Mesmer. We mentioned him in your quiz. He was around in Austria a long time ago, but the word mesmerize was named for him. He figured out what was happening with mesmerization. I remember my grandson Colin sitting in front of the TV watching SpongeBob SquarePants when he was 3, 4, 5, 6 years old. And when SpongeBob was on, nothing else existed in the world for my grandson. No matter what else was going wrong, he was mesmerized by SpongeBob. Bewitched or charmed or captivated or dazzled or hypnotized, whatever you want to call it, you get in the message. That's what we, as professional salesmen, learn early on that we have to do. That's what preachers have to do. That's what politicians who know how to give the best speeches know what to do, is to mesmerize. It's like an audience. It's like a drama. You set up the stage and you bring on the ingredients to mesmerize your audience. Even if it's just for a second or two, it's worth going after. It's worth going after. And learning the skills and the habits and practicing to bring that drama to your stage is just like you're in church. When the minister has got his sermon and he knows what that bottom line is he wants you to focus on, and he uses his gestures and he has the choir singing just the right hymns and the music's playing just right to bring your focus down to help him make the point. I like to say that we're making that point while we're looking for the aha moment with our customer. And the aha moment can be likened to the little baby that's got colic and cried all night long, and it's 2 o'clock in the morning and you are worn out The baby has been hollering at the top of their voice for hours, and you've taken them for a ride around the block in the Buick because they like to go for a ride. You've done this and that, but all of a sudden, out of the night's air, the baby who was screaming all of a sudden looks up at you, stops crying, and goes, takes that deep breath and exhale, the aha moment, and closes its eyes, and that little mouth turns into a three-point smile, and they go to sleep. And we live for that aha moment, but parents and grandparents, right? Well, as salespeople, we live for that aha moment too, and are so grateful because we know how to make it happen. Because as we're talking with our customer, we will make sure they like us, that they trust you, that they know that you know what you're talking about, and you feel confident in they should give you the business. And they know it's the right price and comfortable with the warranty and the reputation of everything involved. And you have bought this in, you've shaken your head and told the story, and keep moving your hands up and down and to let them know in positive gestures that that's the way it is. And then that aha moment will come along when they release their anxieties. When they just say, I've worried about this long enough, I'm just going to breathe easy. And you, as the professional salesman, had your radar on and you're looking for this moment. And you know that moment has come when you're doing your hand gestures and shaking your head and lowered your voice so that they're really tuned in to what you're saying. And as you are shaking your head in your hands, you see their heads shake, agreeing with you. And yeah, I'm into this. That is the aha moment. And you know that it's right then time to stop selling and start closing. Start closing. That is the moment when you're shaking your head, you reach out and you shake hands with them. Or you say, right here's the paperwork. Let me write my initials right here on this number. Just write your initials right there. Or give me a fist bump. Let's do this deal. Never, ever ask them, force them to say, yes, I'll do it. You make it easy for them. You don't force them to say it because they may be sitting beside someone that came with them, a good cop, bad cop type thing. And if they never say yes, then someone else can pin them on it. But you can get that handshake and you can get that signature without that happening. And when you do, they buy. And they did it because you were professional and you led them to the trough to do it. And I'll say to you, congratulations. With practice, you can do this all the time. You'll do it your way. But doing this teaches you that no matter how many times you get knocked down, we have to keep getting up and keep practicing this and be determined to win this race. And you win this race by staying in the game. Staying in the game. Keep learning new processes. Have your values where you respect every person, maintain high standards, earn trust, partnerships, embrace excellence. And that's what we're talking about right now. And lastly, be still and know. Be still and know that God's here and He can help you. And we can't do things right by ourselves, no matter how smart or cool we think we are. At times we have to ask for help and guidance and quietness so we can charge our batteries. That's what I want us to remember. That's the importance of the Academy. We teach things like that. Join us in the future. We'll always welcome you, and I'd like to see you go up in your membership in the Academy. Being the best person you can be, help others, let your candlelight shine. Hallelujah, we finished a class, and thank you all so much for being a part of it for the long haul. I would appreciate your comments, and I look forward to being in touch with you in the future. And we'll be sending you some certificates real soon, so Rita's already started printing them up for us. So how about some comments? I'd love to hear from you before we close this class out. Thank you, Rose. It's been a pleasure meeting you and Jay.
Thanks, Steve.
David, you take care. Have a good week, okay?
You too.
I hope you have a boatload of tax returns to fill out for people.
I hope so too.
Okie dokie. All right. Well, good night, everybody. God bless you and your family and your business.
Good night, Steve. I'll see you tomorrow.
All right. Yes, ma'am, Lynette. Good to see you too. And Rose, take care.
And we still send in pictures and videos and all that, or?
You keep them coming and keep them coming, and we'll get you credited up. I look forward to it.
Okay. Oh, thank you.
I will not give up on you as long as you're pushing.
Okay. Thank you.
Okay, Doug. Bye-bye.